Okay, so welcome to Chapter 19. We're doing accounting for local governments and states, and I know that you all have already gone through this in nonprofit accounting, so this is going to be a little bit of a review. It's good to review from time to time. So we're going to look at the historical development of accounting principles for state and government units. We're going to talk about fund accounting again, because we did last class. Do a transactional analysis, and I moved some of the slides around, so we'll hit all these objectives, but maybe not in this order. We're going to review the fund categories as well as their measurement, focus, and basis of accounting, government accounting principles, and the contents of the CAFR. So running through this again, government entity, the characteristics of a government entity is popular election of or appointments by officials by one or more state or local governments. So, for example, if somebody appoints a head of the Portland Board of Tourism, that would be an example of a government entity, or an elected official has their own budget. That would be another one. And then, of course, they can dissolve the fund area, like the department, and revert the assets back to the government if they don't like that department. I doubt they ever would. And they also have the power to enact or enforce a tax. So here are the list of standards. And so when we were in our class, nonprofit, it was rolling by so quickly. Every week there was so much reading. But one that I felt like we didn't talk enough about was this Municipal Finance Officers Association for developing standards. Obviously, the AICPA is involved, National Council on Government Accounting, and we all know about the GASB. All right, so let's look at the hierarchy of how we develop GAAP for government. And again, some of this might be a review, but it doesn't hurt to take a look. So the GASB statements are number one. Then underneath that, for our guidance, we look at the technical bulletins, the GASB's Emerging Issues Task Force, implementation guides, and then other accounting literature, and I'm thinking journal, peer-reviewed scholarly research. And looking at fund accounting and accounting for governments, remember that there's no profit motive. We know that from previous. We have different types of activity, business types, business type, which is where they collect fees, and then the general stuff. Now, one of the things I wanted to point out, I read in the news that Portland, a lot, because of the recent shutdown, will be losing a lot of money from different fee type activities they do, like open pools and workout centers, all sorts of places where they charge fees, probably parking downtown because not everybody is working from home. So that's going to definitely affect the money that they're going to have next year for things in the city. I think it's going to affect cities nationwide. All right. So each fund has a self-balancing set of accounts for the purpose of the activities, their own accounting equation, ledgers, and financial statements. A single government unit can have multiple funds, and that's in the CAFR. Okay, so let's look at the groups of funds. There's two types of proprietary. This will be a nice fun review. 5 types of government and 4 types of fiduciary. And funds within each category behave the same way and have similar accounting and reporting. So let's look at the government type. So we have special revenue funds for financial resources, and they're restricted. Permanent funds that are restricted, but the earnings that they get are designed to benefit government or citizens. Somebody maybe set up some sort of fund for the benefit of the government. Capital projects to construct or acquire a major government fixed asset are used. So, for example, if you're building a building or doing a road project, some sort of capital improvement. Debt service, which is designed to pay the principal and interest and charges on long-term debt. And then the general fund, which is your police, library, fire, all the things that the government does for you. Okay, so internal service fund provide goods and services on a business type basis for internal customers. So for example, printing, I'm thinking IT here, For the different departments, you would request, a new computer or a computer upgrade. Enterprise funds are business type activities for external customers like trash, utilities, mass transit, parking, all those sorts of things. Um, Pension funds for government trust funds are fiduciary funds, investment funds, private purpose funds, and these funds use this particular basic proprietary model, which we're going to look at, which is basically CA current assets plus non-current minus current liabilities minus non-current liabilities. And they use what's called the net position. All right, and then agency funds, and again, those are funds held for parties outside of the government. All right, so let's look at some transactions. Let's do some transactions. Let's say we issue general obligation funds with a par value of $3,000 at 101 to finance construction of a government office building. Okay, just really quickly. Now I know you're not in class, but like in your mind, yell it out. Is this issued at a discount or a premium? And hopefully you looked one sentence below and said, yes, it's issued at a premium, Amber. I've taken 3 of your classes. I know that that's a premium. And so we'll transfer the premium to the fund used to account for the principal and interest on the bonds. And we incurred construction costs of $125. Okay, so let's So we use this proprietary fund model, which is current assets plus current non-current minus, this really should be a negative. Let me just make that little change for you, to equal net position. And it's pretty much the same as business enterprises using the accrual basis of accounting. But the big thing is we're taking assets minus liabilities to do net position, not same model for the other funds. So the government fund, in contrast, only uses current assets. No non-current assets are discussed in their fund value. It's only current financial resources. The idea is to reflect the use of working capital instead of expenses. All right. So government fund non-current assets and liabilities. Normally those aren't recorded. You don't record fixed assets in government funds. Long-term debt is kept separate, usually in the whole statement, all right, and government-wide, which we talked about in class a while back, and we'll probably talk about again. So, all right, so let's look at the transactional analysis, and my goal, you doing this journal entries, is to do amazingly well on the homework coming up. I think you guys are going to be great at this because we did quite a few in that one class before. So, okay, so if you look at this proprietary fund model, one of the things I wanted to point out here again is we're not looking at any equity, and I know that we've gone through this before, but like just to turn off your equity brain for a moment, we're simply looking at assets minus liabilities. And then again, the kicker between the other one is we add the non-current and subtract out the non-current liabilities, assets and liabilities. So let's look here, and this will make more sense as we walk through this example. So we borrowed $15,000 current asset. Okay, so if we borrowed the money using a 3-year note, we have an increase in current assets. However, we bought equipment for $2,800 cash. So here, because the cash is going down, we're going to subtract it from our current asset, but we're going to add it to our non-current asset because we just picked up equipment. The next thing we're going to do is look at this depreciated truck that cost $18,000 we sold with a net book value of $1,200 and $1,000 cash. So what's happening here is the truck was fully depreciated. It's worth $1,200, but we only got $1,000 for it. So the $1,800 is not relevant to the discussion. So what we'll do is we'll add in the cash that we got into our current and subtract out what the actual worth of the truck is. And one of the things they said is when they said fully depreciated, it should be they said net book value. It's kind of iffy. Like, Is that actually what we're selling it for? Fair market? A little iffy. Probably could have worded that problem a little better, but you get where it's going. And then we subtract the current asset minus the non-current. So we have a change in asset, a loss of $200. And then we have to take the depreciation off as well. Again, we're not worried about the $18,000. That's not relevant in this particular model. And we also have to show it in our full net assets. So again, this is taken off too. And you can see here how that goes. And nothing, like we don't put the, we put the 15,000 on. And the reason why we put it on versus not the truck is because it's considered a current asset. It's cash. They didn't show it as a property, so it's considered current. Now, is a 3-year note current? It's a little shaky. I think I could have maybe worded that even a little better. So, okay, so let's look here within the government fund, and you can say here they only take the current assets and the current liabilities to equal the fund balance. So we show the long-term note. We show how we decreased the equipment and how we sold the truck. And the depreciation is not shown because that's part of a non-current part. Alright, so let's look at some other examples of transactions. We levied and collected sales taxes restricted to use for economic development. Sounds like a restricted fund to me. We paid government employees' salaries and accrued an additional $50. We borrowed $7,500 on a 6-month note to finance general operating costs of the government. So here you can see the only current assets and liabilities model. And what we're looking at here, take our specific fund, and you can see how we are coming in and taking out the different items. So in here, the special revenue fund right here, the 60, again, is only a current asset liability model. Oops, I'm trying to point to it. There you go, right here. And then the employee salaries is only a current liability model. Okay, and then of course these previous items. The general fund is a 6-month note, so you really need to watch those times. So it should be less than a year. I know that one was 3 years, and I was kind of like, it's iffy, but it was also for cash, and cash is an immediate asset. So you see where I'm going with that. So you can see the different items for the special revenue fund. And of course, the rest of them in previous slides are shown here also. Okay, so looking at the basis of accounting, the government type funds, if you remember, use a modified accrual basis and are mostly current financial resources. Proprietary fiduciary funds use the accrual basis that we know and love and are focused on economic resources. Okay, so now we're going to look at revenue recognition. So revenue recognition is the revenue is recognized in government accounting when you have an exchange or an exchange-like transaction. So that would be more like a business type activity where each party gets or receives value. So for example, if you go to a community pool, that would be an example, or you pay for parking, okay? So that's one area of revenue recognition in government accounting. And again, I feel like some of this for you will be a review. The other one is non-exchange transactions. Okay, these are the ones that you are giving up money and really not getting anything in return. So, for example, tax revenues, imposed non-exchange revenues like property tax, government mandated non-exchange federal revenues, and then donations. So those are examples of non-exchange transactions. Okay, so revenue recognition. You recognize the net revenue to be received in government funds when the transaction is substantially complete and funds are measurable and available, or will be collected in not more than 60 days. And I remember from our government class, we talked a lot about that during the discussion of property taxes and how we would account for that. All right, so let's look at expenses and expenditures. Expenses are the cost of the assets of assets or services used, and we recognize them in the period they're incurred. Expenditures are cost of goods acquired, whether or not they're consumed, maturing of long-term debt principal, and they're recognized in the period of current liability. So for example, and again, I'm going back, remembering our class. Remember when we had the interest on long-term debt, back in the good old days, the nonprofit days. All right, interfund loans. Interfund activities, remember the transfers that we did way back when, are expected to be repaid. So there's no discounting on these loans. They're just straight up loans. And one would record a receivable and the other one would record a payable. I remember the journal entries for that. Good old fashioned interfund loans. All right. So remember, if you can reach back in your definitions of appropriation, and I don't think we talked a lot about allotments, but I'm sure we did. It's been a minute, but appropriations are those approved or authorized expenditures, and then an allotment is an appropriation for a specific time period. All right, so the financial reporting entities, you can have the government primary, a special purpose government, or a component unit. And then here's a discussion of the CAFR. All right, again, you're required and issue a comprehensive annual financial report, and it's governed by GASB Statement 34. So you have dual reporting of government-wide, which encompasses everything, and then the individual fund financial statements. All right. Remember that fund financial statements use the modified accrual basis. All right, and we look at our different components of the CAFR and all the different items involved, the actual introductory section showing the org chart, the MD&A, the auditor's report, government-wide and fund financials, and then notes. All right, and here's an example of the City of Golden, Colorado. Their statement of net position. I apologize, my video is probably covering some of it up, but you get the picture. You all have seen this before, so I won't take too long with this. All right, so again, the different fund financial statements. You have this balance sheet, statement of revenues, expenditures, and changes in fund balance for the general government funds, statement of net position for proprietary funds, and the different types of specific statements for each type of fund. And then the other thing that I remember, and this is kind of a review, it's a little different than our basic accounting statements, was the CAFR requires that statistical section at the end and includes both accounting and non-accounting data. Final thoughts on this particular thing. They did not give me a whole lot of notes on the journal entries. I would encourage you to go back into your book for this particular review. I feel like you all are going to whiz through the journal entries. So just, if you are lost, pick up in the book or also pick up in the previous nonprofit class. There's lots of examples in there. Should be just fine with journal entries. I'm looking forward to some great results this week. Thank you.